Hi, everyone, and welcome to Xtract One's live year-end earnings call for fiscal 2023. This is Will Mays from RB Milestone Group. For those of you who aren't already aware, Xtract One Technologies, formerly known as Patriot One Technologies, is a disruptor in the stadium and public space security industry through their unobtrusive artificial intelligence-driven weapons and threat detection system. The company's shares are traded on the TSX under the symbol XTRA and on the OTCQX under the symbol XTRAF. Joining us today is the company's CEO and Director, Peter Evans, and CFO, Karen Hersh. Today's earnings call will include discussions about the state of the business, annual financial results, and some of Xtract One's recent milestones. This will be followed by a question and answer session based on the questions investors have sent in prior to and during the webcast. Questions can be submitted directly in the Q&A module. This call is being recorded today, October 19th, 2023, and will be available on the company's website after the earnings call. Before we start today's call, I'd like to note that all dollars are in Canadian dollars unless otherwise specified. Today's call contains supplementary financial measures. These measures do not have any standardized meanings prescribed under IFRS and are therefore may not be comparable to similar measures presented by other reporting issuers. These supplementary financial measures are defined within the company's filed management discussion and analysis. Today's call may also contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurances can be given that any of the events anticipated by forward-looking statements will occur, or if they do occur, what benefits the companies will obtain from them. Also, some risks and uncertainties may be out of control of the company. Xtract One has a full disclaimer contained in their presentation. Today's call should be reviewed along with the company's annual financial statements, management's discussion and analysis, and earnings press release issued today, October 19th, 2023, and is available on the company's website and its SEDAR+ profile. Lastly, RMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now it is my pleasure to introduce Mr. Peter Evans, Chief Executive Officer of Xtract One. Peter, stage is yours.
Thank you, Will, and thank you so much, and welcome to all of our investors joining us today. It's always a pleasure and very exciting to me to be able to do these earnings announcements, particularly when we had such strong results. We're going to share a lot more details about those strong fourth quarter results, which has ended up in a milestone year for the company. Overall, it's been a very good year. We experienced our very best quarter for deployments and new bookings to cap off a record year of revenue. Revenue grew 365% for our Smart Gateway platform operating segment year over year, and this has been our focus. As a focus, we can see the results and the outcome, as we'll talk a bit about more today. In the process of driving growth, we've added dozens and dozens of customers and continued our expansion into new market segments. We've also continued to build up our backlog of sales commitments, totaling just under $15 million at the end of the year, setting us up for continued and growing momentum as we enter into fiscal 2024, as this backlog moves to get installed. With the aggressive deployment schedules planned, investors can expect these bookings to convert into revenue in the coming months and quarters as we will significantly grow our installed base of deployed systems. Based on these results, the success that we've had so far and our ongoing customer engagements, I want to emphasize that we continue to be extremely optimistic about our outlook going into fiscal 2024 and expect similar growth trajectories and growth rates for the business going forward as we've experienced in this past year. There are some key highlights where investors have expressed interest through the questions in understanding in greater detail. So I'll summarize a couple of those first, and then we'll get into those details. First is the overall business momentum. We've completed the strongest year of sales activity since the company's inception. The total contract value of new bookings increased 344% year over year. This follows on the prior year where we grew 240% year over year. This momentum is underscored by increased demand in the marketplace for our solutions as customers see the clear benefits of what we're delivering and the tangible ROIs from our solutions. And those customers are, in fact, pulling us into the marketplace and into their segments much faster than we originally planned in our business model. We're also very excited about this continued growth trajectory and the ability to continue to beat and exceed new milestones that we set for ourselves. The overall market expansion has changed too. While our primary focus started with and continues to be in the sports and live entertainment industries, where we have onboarded a number of key strategic partners, we continue to expand into other market segments, such as schools, hospitals, manufacturing, and distribution. Today, I'll talk a bit about the immense benefit from the partners, people like Madison Square Gardens and the Oakview Group, and what they've done and they've provided to us as part of that partnership. I'm also going to talk a little bit about our latest partnership with the American Association of Professional Baseball. After that, I'm going to dive a little bit into success in these other market segments, as mentioned, like education, healthcare, and other public sector offerings. The other thing that I want to bring forward is our focus on scale. As a reminder, about a year or so ago, we talked about fiscal 2023 being the year of scale for the company. We continue to drive efficiencies across the entire business, from building a very, very robust pipeline and reducing the time for sales conversions from opportunity to close deal. We did all this while cost effectively scaling manufacturing, installation, and ongoing customer support. You'll hear Karen and me coming back oftentimes this theme today and throughout the year, that we're driving significant increase in the business while keeping our operational costs flat or even down year over year. Karen will discuss those specifics in a little bit more detail. The net of all this is we've almost quadrupled sales for the business this year while keeping the operating costs flat year over year. We've got a lot to cover here today and a short period of time to do it, and we want to leave time for questions towards the end. So I'm going to jump right into a few more details here. The recurring theme from this past fiscal year is that the business has grown impressively over the last year. It's easily the best year in the history of the company. On the screen in front of you, you can see the steep acceleration representing the growth in sales. Those of you who were here last year on our Q4 earnings call will remember that we did experience that 240% growth that we talked about earlier, and that was in bookings compared to fiscal 2021. I'm incredibly pleased and very excited to share that in 2023, we accelerated that growth trajectory, further by increasing our bookings by a further 344% compared to last year. Since we first commercialized the Smart Gateway product, we've booked over $20 million of business for that product, of which approximately $15 million was from this past year, and of which $5 million was from this last quarter alone. That speaks to the continued acceleration and the growing exponential curve that we're on as a company. Demand for our solutions is accelerating along that curve, and we're seeing interest from multiple market verticals that are adopting our technology much faster than we'd originally planned. The key message of our fiscal 2023 results demonstrates that we are growing rapidly, and most importantly to me, that our technology is validated by some of the most compelling organizations on the earth. And the product is here to stay. I continue to be incredibly bullish on the outlook for the company, and I expect that the trend shown in this chart will continue and will accelerate further. Earlier this week, we announced our international growth plans in an announcement we made on Monday. On prior investor calls, I shared with the investors my overall business strategy, which was to stay hyper-focused on a specific market where we had a very tight and very strong product market fit, and to not let the company get distracted or stretched by trying to serve too many markets with too many products at the same time and being weak in all those areas. The approach and philosophy for international markets is the same. It's very complex and expensive to expand internationally, with the requirements for certifications and different certification requirements for every country, sourcing requirements, import-export requirements, tax laws, business constructs, support, partners, these kinds of things. It can be a very, very costly venture to enter into a new country to do business. I've always chosen to adopt a very pragmatic strategy and a very pragmatic approach to global expansion. Instead of dropping 10 sales guys into a country and hoping they sell something, the more important and the more pragmatic approach is to grow internationally based on winning a large critical account and using that account as the anchor, the foundation upon which to build a business. And that anchor funds the growth in that region. We've done exactly that with new recently announced global contracts that will deploy in Asia and in Europe, including winning the largest contract in the company's history, a 3-year, $5.1 million US contract with a global entertainment organization. We expect that this contract will lead to further contracts, not only with that organization, but others of this caliber, as we've proven our solution is very reliable, very scalable, and we provide the highest level of customer support across the industry. We're going to continue to take the same pragmatic and judicious approach to growth, right? Ensuring that we're delivering a highly predictable, high growth business model by being very selective about the markets and the customers that we choose to serve and we will engage, where we see the business is highly accretive to our business plan and highly profitable at the same time. Along with this, we're gaining a lot of support of some of the most stalwart organizations in the sports, entertainment, and venue management businesses, with the support of 2 strategic partners that have been brought on in the last 12 months. Madison Square Gardens and the Oakview Group continue to be very strong partners for us and have opened doors to countless venues as strong advocates of our solution after testing and using the solution in their venues. In fact, over the last 10 months that we've been in Oakview Group's preferred patron screening solution, we've increased the number of units deployed at their venues by over 150%, and we continue to do so. These strategic relationships continue to provide us benefits and validate our position in the market as a top-tier technology partner. Earlier this month, we announced a new partnership with the American Association of Professional Baseball as their exclusive and preferred supplier for a league of their 12 teams. That organization has plans to continue to grow, and currently they welcome over 1.9 million patrons to their baseball stadiums each year. Through this relationship, we're engaging with multiple teams across the United States and Canada, and look forward to delivering a fast, reliable, and seamless patron screening experience for each of their venues. Those venues moving beyond just baseball and into many other activities with their fans and the folks in their environment. The future of these venues, alongside the aggressive growth plan of the APB, is very exciting and very interesting to me. Over the last 12 months, we've also onboarded a top-tier list of customers across several market verticals. We're making very, very strong progress in our primary markets of sports and live entertainment, protecting venues that are homes of professional sports teams across the NHL, the NBA, CHL, WHL, OHL, and the USFL. Our systems are deployed at some of the most premier entertainment venues in the United States, like the Sphere in Las Vegas, Madison Square Gardens, the Beacon Theater in New York, Radio City Music Hall, many of which are now live. And of course, the Moody Center in Austin, Texas, which was just named the best new venue of its size in America last year. We're seeing incredible successes in the sports and live entertainment industry due to our Smart Gateway, which was designed and built by customers and for customers with the needs of those venues in mind, and specifically through the feedback that we see from industry leaders about what they needed in order for our solution to fit their business needs. We're also expanding our customer base outside of the sports and entertainment markets a lot faster than we initially planned. This is due to the growing demand in these segments. During this year, we added a diverse set of new customers from a range of sectors. Organizations like Hyundai Transit in manufacturing, Lakewood Schools in New Jersey, where we're helping to prevent weapons from coming into the classrooms. We're also helping to protect healthcare professionals and their patients, partnering with organizations like Centera Health, and even working with government agencies across the Department of Veterans Affairs, the Office of the Inspector General, and municipal governments such as the City of Phoenix. This is a mere subset of the organizations that we work with and those that we've publicly announced. I'm very pleased to say that we'll be able to grow in every one of these market verticals, as this demonstrates the continued advancement of the Smart Gateway and its ability to fit multiple markets and serve a variety of customers, from schools to hospitals to the places that we all do business. These are only a sample of some of the customers, and we're pleased to say that we have a strong critical mass of customers in every segment. As satisfying is the fact over the past year, we've enjoyed repeat or follow-on business from numerous customers. People have expanded their business with us and taken us into other venues. This includes customers in automotive industries, in schools, in manufacturing, and in the casinos and sports industries. Their satisfaction has translated to many of these customers not only expanding their business with us, but becoming strong advocates and references of our business solution to others within their industry. Looking forward, one of the best gauges of future growth for the business is the quality and visibility of our pipeline. We're also seeing significant growth trends when we look at our sales pipeline, which was about 90 million at the end of 2023. The mix of our pipeline has shifted meaningfully over the past year. We're now about 40 to 50% of that pipeline is customers that are outside of what was our primary target market, effectively expanding our initial target of about a $4.6 billion TAM from the sports and live entertainment industries into a much larger $40 billion TAM that we're now aggressively pursuing, particularly with referenceable customers in those spaces. Now that we have those quality anchor customers in each of those segments who can attest to the value of our solution, we're accelerating our momentum into each of those segments and turning up the amplitude on the marketing and selling activities into those segments. At this point, I'm going to turn it over to Karen to take our investors in more detail through the financial results for the year.
Thanks, Peter. This has been an incredibly busy quarter, and there are several financial highlights that I want to bring to speak to in more detail. First, let's talk about the continued growth in revenue generated from our Smart Gateway or Platform Operating segment. Revenue from the Platform segment was approximately 3.6 million for the year, which is an increase of 365% from last year. In the fourth quarter alone, revenue was 1.7 million, 7 times the revenue recognized in Q4 of last year. The increase was fueled by strong customer acquisition activities and the continued growth of our subscription revenue. We also commenced a large-scale deployment with a customer which contributed to our fourth quarter revenue and will continue to generate revenue in future quarters. We continue to support two selling models for our customers, being the traditional upfront model with ongoing service and our subscription model, which has been very well received by the sports and live entertainment markets. So far, we found that about 70% of our customers are opting for subscription arrangements. As our subscribers continue to pay over their contract terms, the associated annual recurring revenue will continue to build, fueling growth and predictability in our revenue for future periods. These trends demonstrate the momentum that Peter spoke to and keep us optimistic for results for fiscal 2024. Xtract, our other operating segment, is an innovative team, continues to duly focus on supporting the internal platform development efforts while also developing AI-based solutions contracted through public sector agencies. Due to the very significant demand for our platform products, this team's primary focus continues to be directed towards innovation and enhancement of our gateway portfolio and other adjacent product offerings. Accordingly, revenue from Xtract operating segment was about 514,000 for the year, which is down from 2.8 million from last year. Due to the unprecedented demand for our platform solutions, we expect that this operating segment will continue to support our primary business, being our gateway solution. With the significant improvement in platform revenue, we continue to grow our customer base, as evidenced by the increasing value of our contractual backlog and total contract value of signed agreements pending installation, that collectively totaled about 14.9 million at the end of the fiscal year. At the end of the fiscal year, the company's backlog for contractual commitments grew to 4.5 million for fully deployed systems, which is more than double our contractual backlog from 2022. At the same time, the mix of our contractual backlog has significantly changed. At the end of 2023, over 91% of our backlog came from the Smart Gateway operating segment, as compared to 59% last year. Along with our contractual backlog, we had an additional 10.4 million worth of signed agreements, which are pending installation, the majority of which will be installed in the next 12 months, representing a 447% increase compared to the end of last year. Interestingly, our backlog is comprised of both new customers and repeat customers, as well as a broad representation across market verticals that Peter referred to before and that we currently address. Both our contractual backlog and our signed agreements pending installation represent revenue that will be recognized in future periods and are excellent indicators of our future revenue. Earlier this year, I talked about providing investors with some additional business metrics when the time is right in order to allow investors to have a better understanding of our value drivers and to gauge our progress. Based on the traction and success that we're seeing, we expect that we'll be able to share certain business metrics around gross margin, units installed, and other key metrics in upcoming quarters. Moving on to operating expenses. While the company remains focused on top-line growth and continues to invest in targeted marketing activities to drive revenue, we're also working towards scaling our operations and continually improving our gross margins. As Peter mentioned at the beginning of this call, a key theme for fiscal 2023 was scale. This means growing our operations in an efficient manner as the company balances aggressive revenue growth with pragmatic investment into the business so that we can continue to support the needs of our customers. It's notable to point out that while the company achieved revenue growth of 365%, we were still able to keep our cash-based operating expenses relatively flat. In fact, if we remove the impact of the non-dilutive funding that we received in fiscal 2022, we actually reduced our operating costs by over 6%. As the company's revenue continues to grow, we expect to see a measured increase in operating expenses as we continue to invest in customer support and, of course, R&D activities. However, based on the foundations that we've laid, we expect that the costs will be outpaced by the growth in revenue, and in particular, the ongoing subscription revenue that has been growing quarter over quarter. Sales and marketing expenses were $2.8 million for the year, which is 42% higher than the same period last year, as we continue to make investments in our sales and marketing teams, with a focus on go-to-market initiatives such as partner-related expansion and a broadening of spending on sales and marketing-related events. In future quarters, we expect sales and marketing will increase in response to an unprecedented market demand for our products. The company continues to invest in R&D activities to refine, improve, and expand our platform solutions based on our technology roadmap and feedback that we receive from our customers. R&D costs, excluding the impact of grant funding, was $6.2 million, which is a decrease of about 19% relative to last year. This was primarily due to internal restructuring in the company over the last several quarters as we streamline our R&D processes. We anticipate that R&D will remain at current levels or increase slightly as we continue to deliver new and innovative products to our customers. Personnel costs were $5.7 million for the year, up about 8% from last year. Most of this increase is related to continued investment in sales personnel to support our increasing base of customers throughout North America. As our customer base grows, we anticipate that additional headcount will be needed and expect that over the coming quarters, our headcount will increase by about 10 or 15% as our business operations adapt to meet the demands of our customers and to maintain our position as a technology leader in our industry. Finally, moving on to cash flow. During the year, the company had positive cash flow of $2.1 million compared to a cash outflow of $3.4 million last year. In part, this was due to the $13.4 million investment from MSG Sports that Peter alluded to earlier, and which was made to support the continued growth of the company. I'm also encouraged to see a continued positive trend when looking at our cash used in operating activities, which decreased to $2.5 million in the fourth quarter and continuing the downward trajectory that we have now experienced for 4 quarters in a row. We plan to continue this trend in the coming quarters and as we deploy more of our products to customers, which in turn will fuel the continued growth in our recurring revenue and slow down our cash burn. In summary, I'm very excited about our progress this year with record bookings that have translated into solid contractual backlog and ultimately into predictable growing revenue. As I've said before, we continue to focus on scaling the business with smart, sustainable growth and operational efficiencies. We're targeting to maintain current trends as we grow the business in a balanced manner. It's very exciting to be part of this journey at Xtract One, and I look forward to sharing many more milestones with investors in the coming months. And with that, Peter and I welcome any questions that investors may have at this time.
Great, thanks, Karen. And as Karen mentioned, we are now moving into the Q&A portion of the presentation. We've received a number of questions from investors prior to, so let's get started right away. Our first question here is about recently announced growth plans. The question is, can you discuss more about the international expansion plan and how this expansion may impact the company in the near term?
Well, thanks, Will. And I always like the Q&A part of these presentations because we can get into the meat of the business and talk more openly. I think, as I discussed earlier, our growth plans, to address this question, but let's kind of reiterate a few of those thoughts, okay? The investors should know that our strategy is to stay focused on the North American market, where we already have a ton of demand, a very strong sales funnel, and kind of a base of operations and partners to support those customers. Going international just for the sake of going international has never been part of the business plan previously. There's lots of extra complexities in going international, very costly complexities that are involved in setting up operations in another country. Our approach to global expansion, and how I've always been successful at doing this before, is to go into different markets based on winning large accounts first. And then, as I mentioned earlier, using them as an anchor, using them as a foundation on which you can build a business, and that essentially funds the business and the business expansion. In this respect, we have been and will continue to be very selective about the geographies we're going to serve and that we're going to expand into. I don't want to give the impression to our investors that they can expect us to enter into dozens of new markets or countries every month or every quarter, right? Or we're going to seek out every opportunity that comes our way. Like anything, we're going to qualify those opportunities and make sure that we're being very smart and very selective about the growth in order to meet kind of those filters on how we judge a quality business opportunity. Make sure they're very cost effective and they're very accretive to our growth plans and our profitability particularly. So investors should expect that as we enter a new market, we'll do so in partnership with the right organizations. We'll do so based on anchor wins and anchor accounts, and that will then support our continued growth into those local markets. But I want to be very clear too. We've barely scratched the surface or fully tapped out the North American market within the market verticals that we're now serving. And as I said earlier, that's about a $40 billion TAM locally and domestically that we can continue to monopolize on while we opportunistically grow our global footprint. I hope that provides a little bit more context to our listeners today, Will.
Great. Well, actually, a follow-up to that, investor noticed that the press release referenced the company has won 3 international contracts. There was also a reference to a $5.1 million contract. Can you provide some clarity whether that $5 million contract is a single contract or is it a total of all 3 contracts?
Karen?
I'm sure. I'm happy just to clarify that. The reference was to one customer who represented the $5.1 million US. So it's the most, as Peter mentioned before, it's the most substantial contract that the company's won in the company's history. And the customer is a large global entertainment company, and this is one of their largest locations. So we're very excited to be working with a world-class organization like this and strengthening our relationship with them. And we're hoping that this is the start of a very long and prosperous partnership going forward.
Thanks, Karen. We've got a technical question, actually several on the same subject. Came in from several investors, including the team over at Northland. Can you quantify your false positive rates and negative alarm rates?
Yeah, interesting question, Will. And this has been a hot topic these days, throughput rates, alarm rates, things like this. I think there's even an article dropped today about that by one of the news organizations. It's a very interesting question, and we also have to be careful because it's kind of steeped in a little bit of false marketing and misrepresentation of information. There's a lot of what I believe to be marketing out there that says 3,600 people per minute, 10 times per hour, 10 times throughput rates, under 5% false positives. Independently, these numbers can be achievable. But what's being missed is how things work in the real world and how those different metrics affect each other. If you dial up the sensitivity on the technology and make sure you catch very small knives like us, that could affect your false positive rates and your throughput rates. Very much depending on how the organization has set up their security operations or their concept of operations, their ConOps. Some organizations will have somebody alert and swing back through and come through the system again. Others will take the individuals off to another area and do secondary screening there. All these things affect throughput rates, false positive rates, and things like this. So, we have to take the view in kind of totality. In general, we've had scenarios where we've run an event with a customer and we've had 3,000 plus people come through in an hour and a 1.1% false positive rate. The exact same system, the exact same place with exact same settings, one night later, 24 hours later, barely got 1,400 people through it in an hour and probably had about a 12% false positive rate. The primary difference, the demographics. One night, young individuals going to a concert. The next night, I think it was like the 55th anniversary of the Beach Boys or something like that. And the crowd demographics were different, and the number of canes and walkers and very large purses and things like that affected the outcomes. So, our approach has always been to, while we will highlight some of these numbers, we sit down with every customer and say, let's look at your venue, let's look at a bunch of different events, and let's correlate the data to find the sweet spot for you based on what weapons you want to catch, what your security operations are, right? What your throughput requirements are, what the demographics are. Do you allow bags? Do you not allow bags? Those kinds of things, and find the sweet spot for each customer so they can maximize the value out of our solution.
Thanks, Peter. The next question up is, what are your top 3 verticals, and do you think these will remain the same in next year?
It's a great question. Right now, our top three verticals continue to be arenas and sports stadiums and hospitals and manufacturing. We're doing very well in all 3. We entered into and started aggressively pursuing the school marketplace in the last 12 months. We're kind of watching that market carefully, and now that we're seeing a lot more interest, we're aggressively pursuing schools, and we're winning schools, and we've signed a number of schools. And so I expect that segment will grow also. And so it'll no longer be a top 3, it'll actually be a top 4 for the segments that we'll see, impacting our positive results for the coming year.
Great, thanks for that. Next question: are the sales cycle, the win rate, and the deal size changing?
Definitely. I think the market keeps shifting all the time, and we see the dynamics of deals changing all the time also. The sales cycles have definitely been shrinking, particularly with more and more referenceable customers. If I can point someone to Madison Square Gardens and they can come and see our solution there, that significantly improves and accelerates the sales cycle. The win rate is a very interesting question. There are places where our product is just not a good fit, and there's places where it's a perfect fit. And when we have the opportunity to compete on an even footing, right, with a focus on security, we win. In some cases, we will lose, or when a competitor chooses to buy an account, and we can't really stop that. There are also places where our solution is not a great fit, and the competitor's product may actually be a much better fit. For example, with a competitor or the customer is focused on cheap as a primary driver for their decision. That's okay. There's more than enough business to go around with $40 billion TAM, and there's more than enough to fuel the kind of aggressive growth rates that we've seen. We don't expect to win every deal, and so we are judiciously qualifying opportunities at the front end to ensure that we're not going to waste our time with opportunities that aren't a good fit, and make sure that we drive a very high successful win rate by being very selective at the front end and qualifying at the front end.
Thanks, Peter. We're pressing up against time here. We've got time for one more question. Next question, or last question, is Xtract One has achieved several significant wins this year. Are you able to outline what investors should expect to see in the next 6-12 months in terms of significant milestones you're tracking?
It's a great question to wrap up on here, Will. There's a couple of thoughts here. We hold ourselves accountable to meeting or beating certain milestones. And as I look forward, there's a couple of key milestones that are, key, and we've got our eye keenly paying attention to. The first is the DHS designation award as an approved technology. We're aggressively pursuing that and doing everything that we can with the DHS to accelerate that as fast as we can. The pro sports industry, this is going to be key for us. And we've seen a lot of positive movement there. And our expectation is we're going to continue to grow in a number of leagues over the next year. We're going to expand our partner and reseller base. This is necessary for leverage growth so that we can continue to manage our operational costs, as we talked about earlier, while creating aggressive growth rates. We are also focusing on doubling our manufacturing capacity. If we continue to grow, and we expect to grow at the same sort of rate as we did this year over year, we're going to plan on doubling our manufacturing capacity within the year, and then we're going to double it again within the year. And then, that will be an enabler of us moving bookings to backlog and revenue with a significant ramp in deployments and manufacturing of our systems and getting them out into the marketplace very, very quickly.
Well, thanks, Peter, and thanks, Karen. That was the final question that we have time for today. And before we end the call, is there anything else you would like to leave the viewers with?
A couple of thoughts. The first thing that comes to mind for me is, we grew 240% year over year last year. We grew almost 400% year over year this year, all while keeping our OPEX cost essentially flat or slightly lower, 6-ish% in the last 2 years. We've got a backlog of contracts and installation, plus what we've seen, already going into the first year that tells me we're on our way to very similar sort of growth trajectories for this year and future years. So it's a really good place to be. When people ask me how we're doing, I'll let the results speak for themselves, but in a word, I think we're doing awesome. So I'm very pleased with the growth of the company. I'm very pleased with the progress that the company's made over the past 12 months. We've added key strategic partners. We've expanded our customer base. We've got a broad group of referenceability in every market segment right now. We've got an amazing team. We've recently added to the executive team with some quality individuals who are already having a significant impact on the organization. And we're in a compelling marketplace that's not going away and is growing very, very fast. When I look at the next year, I see this year as a milestone year and the first stepping stone for even more aggressive growth. And investors can expect the trends that we've talked about here today, and the growth rates that we've seen today, to be continuing as we've demonstrated and going forward into next year. It's a very, very exciting time to be part of Xtract One. We're disrupting an industry which hasn't experienced this kind of significant change in over 5 decades. And we're working very hard to be the driver of that disruption in a quality and integrity manner. This is about security. We're going to make sure we always get it right. It's been a bit of a roller coaster ride, and I want to thank all of our investors for their continued commitment to the business that we're driving, and we're driving hard. With our focus is on executing with a primary focus on growing the business. I also want to thank all of our team members. We've got a fantastic group of people here at Xtract One. I couldn't be more proud of the work that they're doing, and they have done in the last 12 months. And then finally, a reminder. We've got our annual general meeting that's coming up on November 17th. I invite everyone to please attend, and I invite them please to vote, on all the different voting opportunities that they have for our business and our growth going forwards. Thank you, everyone, for joining this call. It's been great to work with you this past year, and I'm looking for more successes next year.
Well, thanks, Peter and Karen, and thank you, everybody, for joining the call today. The recording for today's call will be soon made available on Xtract One's website. I know that we didn't get to all the questions. If you have questions, please feel free to send them in to us at Xtract One, the number 1, Xtract One at rbmilestone.com. That concludes today's call, and I hope everyone has a great remainder of the day.